Back with Bobby and JJ Radio, we're talking about all different types of natural disasters, how to be covered with your insurance, how to fight your insurance if they didn't give you your proper settlement. We have the best in the business right here with us talking about that, Solis and Smith Law Firm, that specialize in helping actual not only homeowners but commercial owners with their claims against insurance companies. Let's talk about some real difficult things to understand. Why? Let's talk about insurance deductible, guys. So why? What is a deductible that makes it so high?
Well, when you go to your insurance agent, you're asking them, you want to be fully covered for weather issues and theft and fire, and you want to be fully covered, but the price. People don't want to pay a high premium, so because whether it's factored into their mortgage price or their mortgage payment, they want to make sure that their payment's low. Right. So in order to lower your payment for the insurance, you're either going to have a higher deductible or you're insuring your house for less. Mm-hmm. Most people say, well, I'm going to do a 1% deductible, 1% of your policy
value.
limit, or a 2%. So the higher the deductible, the lower the premium. So people don't realize that if you have a problem like a hail claim and you have a $5,000 deductible, but your roof is going to cost you $5,000, basically it's a wash. So they subtract your deductible from the damages, and the roof you have to pay on your own. Right. And so people don't realize that until they actually make a claim. They're like, oh, man.
Well, you're better off just getting it fixed yourself and not putting the claim, because then your insurance doesn't go up, right? Maybe?
Well, I mean, with home insurance, it's a little different. So it's just because you make a claim doesn't mean they're going to go up on your insurance. It's not like car insurance. Mm-hmm. The rates in San Antonio are probably going to go up overall, since this was the largest storm in San Antonio history, the most expensive one actually in Texas history.
So this is the most expensive storm in Texas history?
That was the latest article that came out a couple weeks ago.
Wow.
And that's
a lot of windshields.
Yeah, because when you're factoring up the windshields and also the homes that they're having to pay for new roofs, they're going to lose money. And so they have to
make it back.
They have to make it back. They're going to increase premiums to everybody, whether you made a claim or not.
So what happens if I get an insurance payment and I just take the money and run, go to Vegas, put on red?
Well, you certainly you can do that, but it's not a good idea.
I mean, you could double up.
I know, double down.
That's not what you want to do.
Hey, my lawyer said I can do it. I'm out of here, guys.
They can, you can't control what people are going to do with their money. But typically, what will happen if you have a mortgage on your home? Right. One thing that the insurance company payment is going to do is it's going to include the mortgage company on that check. Mm-hmm. And the reason why it's there is because the mortgage company has
a vested interest in your home.
They've got the vested interest in the home, so they have that interest to make sure it's protected.
Yeah.
So they want to know that house is going to be fixed.
Right.
So you can't just go blow the money.
Well, actually, when they sell the house, so there's an actual exact question that says, "Have you ever made an insurance claim and not use the proceeds to fix the
correct?" And
well, I have had somebody.
We only had one guy that said yes, and both of us were flabbergasted. We're like, "What?" And he said, "Yeah, I had a
he had to pay for a wedding.
He had a quinceañera.
No, he had to pay for a wedding.
Right. And I was like, "Wow, I guess that."
Well, then there's a second piece to that. That's another problem. Is let's say you get a full payment for your roof, and you don't replace it, okay?
Right.
And let's say a year or 2 years down the road, you have another hailstorm.
Right.
Then you make another claim. The insurance company comes in, and they're going to compare that claim file to the previous claim that was made. And if they can identify that the damage is substantially the same as it was before, they're going to say, we already paid you once and you didn't replace it.
Well, what happened to us, we had about 20 people under contract. First hailstorm came, we got adjusters out. Second hailstorm came, and it was all new deductibles. So it was a cluster. We couldn't do anything about it. So, and they were all before closing, so it was crazy.
Right.
Like we were running around.
In that situation, you would have two deductibles?
Yes.
It's per occurrence.
Two different situations.
Right. You get charged a deductible for each occurrence.
You should know this. You're running all of our contracts. I'm just kidding. Why do insurance companies factor in so much depreciation? Let's talk about depreciation, because I don't think anyone really understands what that means.
No one appreciates it.
Well, when you're looking for policies, there's two types of policies. There's an actual cash value policy, which they call ACV, and a replacement cost value policy, which is RCV. Now, what that means with an ACV policy, those are going to be less expensive, because that means
which one?
An ACV.
Okay, actual.
The premium is going to be less expensive.
Gotcha.
Because that means they can take out depreciation. So let's say you have a 20-year-old roof, and the life of a shingle on that roof is a 20-year shingle. So they can say, well, this roof has almost used its whole lifespan. They can take out depreciation for the age of the roof, and you don't get it back. So let's say you have a $5,000 roof, but depreciation is $4,000 or $3,000. They'll cut you a check for $2,000 minus your $500 deductible.
So $500.
So you get a check for $1,500 or whatever, but that's not going to fix your
not even
damage.
make a dent.
Now the replacement
no pun
cost,
intended.
right? The replacement cost value means that they have to pay to replace the roof. It doesn't matter if the roof is 50 years old.
Right.
They're going to have to pay you the depreciation.
So right now everyone should find out if they have an RCV or an ACV.
Yeah. Then ask their agent, and the agent will say, yeah, it's RCV, and it's really not that much more expensive to get an RCV policy, and people should know that, or the agent should tell them that when they're buying the policy. So
sure.
People are very surprised when they get their insurance breakdown
and
they
it's
realize,
all this stuff out.
Yeah, they said it's non-recoverable depreciation, and they're getting a small check, and they can't do anything.
Real quick takeaway: what happens if an adjuster comes out and we get a payment, but it's not enough to cover everything?
They could always contact them out, contact the insurance company, ask for another inspection.
Okay.
They can always do that. That's totally common. If the insurance company refuses to do that, their next option is to call an attorney.
And how do I know I'm hiring the right roofing company?
Well, I'll tell you, this is a very important thing, because when you have a massive disaster like what we had in San Antonio, there's a lot of roofers that will come in from out of town.
Oh, yeah.
And so what you want to do is you want to focus on a local roofer, someone that you know is going to take care of you if you have problems down the road.
That'll warrant the work.
Absolutely. And another thing is there's some roofing companies that will ask for, if you have, let's say, a partial payment in the beginning of the claim. I've heard of roofing companies that will say, well, give us that money, and then when you get more, then we'll start the work. Don't ever do that.
Yeah.
Shop roofers. Make sure you get the best deal. Don't give them a dime until you get that roof on your house.
Well, we got a great one, so that shouldn't be a problem at all. But for more information about Solis and Smith, check out their website at solisandsmith, ANDSmithLaw.com. You can call them directly at 210-223-5000. Again, that's 223-5000.